Generally, when companies are growing, they tend to use more working capital. So that has a drag on cash flow. That means there's more working capital that needs to be financed. That's particularly the case right now, where we're seeing the fall in the sterling exchange rate and inflation from that drive the fastest build-up of inventory for manufacturers in 6 years. That's why working capital is so important for manufacturers right now. Our working capital index report that we released earlier this year told us that there was nearly £500 billion of surplus cash tied up in British companies at the moment. And that is cash sitting in idle assets that could be put to better use to fund growth, buy new machinery, employ new staff and trade in new countries. It's a balance between financing options, which a bank can support with through invoice discounting or supplier financing, and a company making process improvements, often simple housekeeping like when you issue an invoice or when you start your dunning cycle. For instance, if you started your dunning cycle 2 days earlier and you're a £500 million turnover company, that would release nearly £3 million of working capital into the business. Now, in order to make those improvements, you need to have good data and you need to make sure that the business case for working capital improvements is well understood across the business. Trading more internationally is part of risk management by diversifying concentration from a single client base and a single market. But as companies trade more internationally, it's important to understand the risks and opportunities involved in trading in a new country. That's why we've created an international trade portal to help our clients navigate these risks and opportunities, from regulation to coming up with lists of companies that import a particular good. And then, of course, it's important to have a foreign exchange risk strategy and also use traditional trade instruments like guarantees and letters of credit to mitigate counterparty and country risk.